Hi and welcome to Westpac London's end of day report for Monday, September the 26th. Well, we've seen a bit of positive sentiment return to markets today. A lot of commentary, not really official, but nevertheless coming from fairly senior sources, both in media organisations and anonymous sources, allegedly from major European institutions, suggesting that policymakers have collectively started to pull the finger out a bit in terms of delivering a response to the European sovereign debt crisis. A lot of the headlines started filtering through at the weekend, of course, related to leveraging the European Financial Stability Fund so that it had more firepower if there were in fact a Greek default that had to be put in place. And there was talk about a 50% haircut for investors, for creditors of Greece, but that it would be ring-fenced by this new and improved EFSF. There was talk that the European Stability Mechanism, not due to start until 2013, would actually be brought forward a year to 2012. There's talk that the European Central Bank might cut by as much as 50 basis points at its October meeting next week. Hinted at by various ECB Council members, in fact, although others have poo-pooed the suggestion. It doesn't matter. All this talk about action happening in yes, the French recapitalising their banks, a plan being put into place to that end. Of course, denied by the French, but nevertheless, people are talking about it, which means it's certainly a plan, some sort of plan has probably been put into place behind closed doors. So all of this talk has inspired investors who were despairing last week that nothing could be done about the European problem. Europe's still a big mess. It's going to take a long time to sort out. There's still going to be a recession in Europe. Our formal forecast is the recession will be in the first half of next year, but I've got to tell you, we're thinking of pulling it forward to beginning it to start. Such the beginning of the recession actually is in Q4 of this year. All of that's still going to happen, but at least as far as investors are concerned today, something a bit more substantial seems to be in the offing in terms of policy delivery. Dates to watch will be October 3rd, when EU ministers next meet, and then November the 3rd, I think, which is when we get the next G20 meeting. So, given all of that, today's data flow wasn't that significant. I'll just mention a couple of things quickly. We saw a fall in the IFO Business Sentiment Index out of Germany, the third fall in a row. The last time it fell 3 times in a row was actually in 2008 when Germany was going into recession. Draw from that what you will. In the US, we had a 2% fall in new home sales in the month of August. They're now down 4 months in a row. And in fact, when the US economic recovery began in the third quarter of 2009, since then, new house sales have fallen a further 27%. That just helps illustrate how this is an atypical recovery in the US. Housing is not participating, therefore there's not the related consumer spending that you'd normally see associated with new housing. And those two factors being missing have made this the sustainability of the US recovery much more difficult to achieve, as Fed policymakers are now realising. We also had a Dallas Fed factory survey that was weak as well, but it didn't matter. I mean, as I speak, at 5 o'clock London time, we've got European markets up. The FTSE's up 0.4%, but much better gains in France and Germany, up 2% and 3% respectively. And the Dow in the US is up more than 1.5% at the moment at 10,937. The broader S&P measures only up 1.2% at the moment. The Nasdaq's actually lagging, up 0.5%. Apple shares are off today on talk of weaker sales coming through, I think, for iPads. Anyway, so that's the equity market summary at the moment. Europe closing, US still got some hours to trade. Commodities aren't too exciting today. Gold's down 1.5% at $1,615 an ounce, off almost $300 from its $1,900 peak. But oil and copper prices are unchanged. Oil is at 79.83 per barrel at the moment. And the Aussie dollar, it's traded at a 2-cent range in London actually, from 96.2 to 98.4 cents, but it's at 97.5 at the moment, just a little bit above the midpoint of that 2-cent trading range. All right, I think that's about it for today. Yep, that's all I can think of, and I'll be back tomorrow.